All right, good morning, everyone. I think we gave everybody time to get in. So, this is when we go over our morning kind of pre market analysis, get a fresh look at what's happening. Um, Charts are cleaned off, kind of messy. And what we need to do before you sit down and actually take a trade is you should always look back out and do a top down analysis from your 4 hour, 60-minute, 15-minute, dial down, and refresh your memory as to what your plan was the beginning of the week, what you saw set up, from last week, and then we do an analysis over the weekend before Sunday. Well, here it is Tuesday morning. So several things have happened, and each day or night, I recommend going back out to the 4 hour and getting that snapshot of what you think is going to happen, or your both your trend line levels, your downtrend line, uptrend line, as well as a 4 hour zones. So when you get up, I did not trade London session last night. I traded some during Asian, but I didn't trade the London session. So sometimes a lot of movement can happen during the London session. So when I wake up for US session, I need to go out and kind of look and see overall what has happened. I mean, yeah, I can be down on a 15, 10 minute, 5 minute and see what's happened, but I need to go out. I really want to go out to that 4 hour and just refresh my memory. Now, something I like to do is before I lock up my computer at night, I like to come into the charting and set these up on a 4 hour time frame. And then what happens is when I come down to my computer and log in, I'm forced to look out the 4 hour time frame. It just reminds me. And again, when you trade, it's all about putting the odds in your favor, guys. Everything you do should help put the odds in your favor. Another thing is news releases. Well, we got some news releases coming out today. So some traders trade the news releases. I do. I like the momentum. I'm not making money if there's not movement in the market. That's pretty plain simple. If there's no movement in the market, I'm not making money. I know we got into one trade last night and it just trickled down. It was a good trade, but it just was so slow. Okay. And we're down on a 3 minute watching it and it just trickled down. So good positive trade. And then we ended up reversing when it crossed our trade line. But good trade, just super, super slow, but it was off hours. So that's something to bear in mind as well. So when the news comes out, we like to know what is coming out so that we know that our trade is going to be affected in one way or another. Okay, so we're not trying to predict what's going to happen during news, but we need to know that when news is coming out, that exact time, because it could affect our trade. If we are in a trade, we might want to close out part of that trade, close off partial. We may want to, close it all out. You definitely want to adjust your stop loss to lock in some more position. So it's things like that that you should do with your positions before before a news event. Either get out altogether, close it, close partial if you haven't already. If you're in profit, close partial. Lock that in so that amount is definitely locked in. So I'm out right now on the 5 minute time frame. This is kind of what my charts look like as I'm actually day trading. So I'll have 4 up on this one computer. So this is just one monitor and I've got 2 this size. So I'll have 4 up. I know it kind of looks small probably in the video, but this is a 42-inch monitor, so it's pretty big. And then I've got 2 because the other one has 2 other broker platforms I'm logged into. So this is the only one that has TradingView on it, and it's through one broker. And you can have multiple brokers. I don't know. I'm not going to really go into that, guys, but you'll see I've got 2 tabs here. So since TradingView allows you to log into only one tab for your broker, you can actually open another tab and log that into a second broker. So you could have multiple brokers in. That's what this is. This is another broker through TradingView. So I can actually come in here and trade here, and then I can pop over to this gold chart and I can trade in that broker as well. So it allows you to do that. It's just you can only be logged into one tab per broker. It won't let you log in. If I try to log into, this one's Trade-Evade. If I try to log into Trade-Evade here, it'll log me out of this one, okay? So let me open up, I think I got NQ on the top of my list. Just bear with me for a minute. NQ, or gold, should be at the top. Well, let me pop this one over to gold here. Kind of blow it up. So no trades on yet, and that's what it looks like now. So again, I don't like to come just sit down at the computer and trade. You can. I could fully see that, you know, we popped through these green trend lines. You know, it popped through, it tested the back side, pulled down, tested the mid zone. So, you know, when it popped through the trend line, it actually pulled up and not only tested the back of the trend line, but tested the top of this zone. That's a 4-hour zone. It's off of a wick on a 4-hour swing. So it tested the top, pulled back down, pulled back, tested the middle of the zone, and then now we've seen that bearish setup continue. We have a low, we have a high, we have a low, we have a high. This doesn't make it look good, but overall it's short, and we're trading it to, you would trade it down here to this outer trend line. So I can look and see that. However, I like to do the same thing every day. Okay, I like to come out to the 4-hour, just kind of remind myself where I am. Because down on that 3-minute or 5-minute, you know, looking to take the trade, I might not remember that gold's at all-time highs. It's kind of hard to forget when you look at price, but it is. But you look out at the 4-hour time frame, and then you can say, oh yeah, wait a minute, we're like at all-time highs here on gold. Okay, so overall, on a larger scale, a 4-hour time frame, the trend is bullish. I mean, the trend in gold's been bullish. I mean, it's been nothing but bullish and nothing but up as it's been making all-time highs. So that's on a 4-hour time frame. Then we dial it down to 60, 15, and then look at those to see where it's heading for the day. How's it set up more for intraday trading, for day trading, for scalping? So it's not going to always be up, okay? So we know that gold on a daily, you know, if you look at a daily chart, the 4-hour chart, gold is up. It's bullish. Well, I'm not going to sit out through all this drop. In fact, we didn't, you know, and then when it bounces here off an old trend line, you're trading long. And then when it pulls back down, you're trading short and trading long. So that's a super huge amount to miss out on, waiting for it to break a trend line. Finally broke. I think this line was actually originally there to there. And then when this high was made and pulled back, we moved it here, and then that was finally broken and kind of tested. Oh, I got an old trade order on there. Come on, delete it. All right, so 4-hour time frame. So again, all-time highs, and I don't have a zone from over here, but I think I want to draw one from way back here, because this was a really good high swing, okay? A real good swing that the top of that downtrend line is off of. And I could see, you know, a low here, that is kind of in line with that, all right? So I definitely want to draw that. I've left some old zones in here. Something with the zones we try and do is we only look for basically one above, one at a high, swing high, which is up here, one at a swing low, which is down here, which is also the back of this down trend line, okay, which is also the up, this uptrend line as well. So multiple reasons, you know, for it to bounce in these areas. So if it does pull down and pop through that trend line, it wouldn't surprise me if it pulls down to this zone and the back of that trend line. Okay, so we're ready for it. We have runners on for that. So I'm going to look in on this right here. There's really not a wick to draw off of except for back behind it. So what I like to do is look at a candle. So let's say this green candle was this one here, or this red one here. I would actually just draw the zone off the wick. That's how I like doing it. However, we don't have a wick on this one, okay? So what I do is I like to have a zone. I don't like a dead straight hard line because I know they're not going to turn on those lines. I know that at one point in time, this is super bullish. I mean, look at all these green candles. That's super bullish, okay? It stopped there, come back, pull back, and then went bullish again on 2 more candles, 4-hour candles, and then big red candle. So to me, this right here, this price level is also important because it actually stopped. I don't know how many I'm not counting the candles, what, about 10 maybe? 10, 12 candles? And then it stopped at that price point, retraced a little bit, kind of pushed a little bit further, but didn't even make it. So I want to incorporate that as well. So I'm going to look to draw my zone from there, and I don't think I want to just do it down to the wick. I want to go to the candle body. So you grab your box tool, rectangle tool. We're going to start, like I said, at the top of that. We'll pull back here to the candle body, and I'm going to leave that as yellow. We'll go over here and look now. So now we'll come back and look at where we are. So again, you could see multiple times where this level was kind of hit. So here it pulled back, red candle bounced right off of it, came down to test the bottom of the zone, the new zone we just drew. That's where the 4-hour candle stopped, okay? And then after it broke back to the top of the zone, that red candle stopped right there at the top. So for me, that looks like a good, valid zone that I need to be aware of, okay? So I'm just going to keep that as a mid zone. I'm not going to turn it green. You can, if you want. We could do that. Because typically we look for one zone below to label as green, one zone above as red, and then a zone or 2 as yellow. In this case, we got Forex market opening up in 10 minutes. So in this case, I think I'm just going to leave those both yellow. I know that my zones, if they're these colors, green, red, and yellow, they are drawn off of a 4-hour time frame. If I draw any off a lower time frame, I don't color them these colors. So these are 4-hour zones for me. So as I dial down to a smaller time frame and go down to the 16 and the 15, well then when I see these zones pull up, I just know it's a 4-hour zone. And on a 4-hour zone, it could break through or it could turn around. Those are the 2 things you'd love to see. You'd love to see when it pulls up to a zone, it breaks through and runs to the next zone. That's killer. That's an awesome move right there. Break through a zone, move straight to another zone. Come back down, break through a zone, move straight to another zone. That is ideal. That's this move up here. Green candles broke through a zone, boom, went almost up to the red zone. That's ideal. That's the ones we love. That's the ones where our runners really, we really bank a lot on the runners. However, sometimes they will turn at a zone like this, pulls down, turns, goes back up, tests that one, and then finally comes down and breaks after sitting there for a minute. So sometimes they will turn right at a zone over here. Turned right at the zone, went up a little, came down, turned right at the zone before moving to the other. So that's a test and a retest over here on a 4-hour time frame. Test and a retest of that zone, and that zone held up as support. We look for these to hold up as support and resistance. So it held up as support, and then it went to the other zone. So ideally, we want to look for it to turn, and if it's pulling down on a smaller time frame, we're watching lower lows and lower highs form and play out. We're in short, we leave a runner on, and then when we start seeing higher high, higher low on the smaller time frame, well then we're reversing or switching our position. We're getting out of our short and getting in long. So that is an ideal situation, is a bounce. We leave our runners on, so we would leave a runner on this when we're down here. We'd close out partial, leave a runner on, and in case it breaks and runs. If it starts turning and we see higher high, higher low, we bail. We close that runner and we look to get in long. And the reason why is this right here. You're in long, it goes up, you close out partial when it gets toward a zone, because we don't know. So it gets toward a zone, we close out partial because it may turn on us. That's why we close out partial, because it may turn. So we got to lock in money, or why are we sitting here? So we close out partial, leave a runner on, and that's why, because it just broke and kept running. So that's why we leave our runners on until you see bearish structure set up on the time frame you're trading, okay? And it could be a 3 or 5. For me, it's a 3 and sometimes a 5, but I really like the 3. But some people are out on a 15. When I started, I was on a 15 to take trades. So whatever time frame you're on, you're looking for reverse direction. You'd look for higher highs and higher lows to start forming lower lows and lower highs. Okay, so, and this is something that is not ideal. So those are ideal. A bounce off of a zone, a break of a zone, break and run. This is not ideal. Okay, where it breaks through the top of the zone, and then you think, man, it's going up to the red zone. Well, it didn't. The next candle pulls back through. But again, we're on a smaller time frame. So if that's your entry, when you get in, if you would have got in on that break, let's say you didn't do anything else, I guess it's Sunday that's marked. That's Sunday. So if you didn't get anything else and you took it when it broke there, you're down on a smaller time frame. So you would have been able to actually close out partial, maybe you stopped to break even, you would have got stopped out with no loss. All right. So that's where we're at on the 4 hours. So looking at the 4 hour right now, it's between two zones. I don't like getting involved between two zones. I'd rather see it near a zone. If it was down near this zone, I'd be looking for it to break that zone, break that trend line, trade it down here. Or, and that's one plan. My other plan is to trade it if it bounces. So right now where it's sitting, if I was a 4 hour trader, I would be sitting on my hands. I'm not looking to do anything. I'd have to see it pull to a zone. So we go down to a 60. Made a low, lower high, lower low, lower high, lower low, lower high. I hope you know where I'm going with that. Right now it's still bearish. Okay. So that being said, right now we had a bullish swing over here, higher highs, higher lows. It broke back through our zone, broke our trend lines. So now what has it formed? It's got a high, low, high, low. I mean, that right there is a bearish formation. Okay. So that is completely right here. You got lower lows and lower highs being formed. And that is a bearish formation that it's moving short. Okay, I don't know if this is particularly the high. It's a pullback, and it could be a high. And then we would look to trade it here. So if you wanted to get involved with this, again, we're on the 1 hour. So we still have to dial down to a 15 and see how it's set up. And then we would go into a 5 or 3 to look for a trade. So overall, right now, as of now, it's in a bearish pattern. Okay, it's moving short on gold, still moving short. And we traded it the other day. We traded like 3 different bounces here. You'll see on the lower time frame. It bounced like 3 times off this. Was it this zone? No, I don't know, guys. But we traded 3 times. Shorted it in there before it finally took off. So that overall, though, is a bearish formation. So right now we have to be thinking it's in a bearish move. So far, it's bearish. I should be thinking bearish. My bias is starting to set up as I need to be bearish for the day unless it gives me any other confirmation that it's setting up in any other way. We dial down to a 15. Again, we leave this. I can leave that on the chart. If it helps you remember what's going on, you know, use your path tool to mark something like this. And then, or you can use an arrow. If you come in with an arrow, pop an arrow on there that is pointing down, if you have to do that to remind yourself. I use trade sheets. I don't have one pulled up, but trade sheets are great. I don't really have to use them anymore, but I've made those up for people, and the trade sheets are awesome because it gives you a checklist to go through. And part of the checklist on my trade sheet is going to a daily 4-hour, but that's if you're a 15-minute trader. Daily 4-hour and 1 hour. If you're trading lower than that, a 10 and below, then you're 4-hour, 1 hour, 15-minute. It's a checklist. It makes you go out and you look and you see which direction it's heading. Well, if I go out to a daily chart, we already know that gold's been going up, making new highs. So gold's overall trend is long, bullish. That's on a daily chart. That's we see that from left to right it goes up. Even a 4-hour, we've had a huge upswing. But now on this, we're setting up down. We've been bearish on this now. We've been bearish, okay, for the last 2 days since beginning of the week. So right now we're still thinking bearish. And if you look, we have a high right here that this kind of turned out. You can I like to use the wicks unless I'm on like a 3-minute time frame. 3 and 5 I typically still use a wick. If I'm on a 3-minute, I don't always use the wicks. But if I'm anything above, I'll use wicks. If I'm on a 1-minute, I'll kind of ignore the wicks sometimes. So overall, I see that this high level here is where this is. And you guys have heard me talk about inside tops, inside bottoms. I don't really go over those in depth. It's not really a strategy. It's just a support and resistance level, acknowledgement. Basically what it is the inside of a swing is all it is. So we had gold pull up here and then pull back down. Well, the inside of this turn is down here. It pulled up bullish, pulled back up, and then shot down. So that's the inside of that swing, or inside top, since it's at the top. Inside bottom would be just the opposite. So if I look at where it turned here and look at where it turned here, well, if I move my tool over, it's pretty much right there. Okay, at the candle bottoms. And that's what they call an inside top or bottom. It is something that you should be very aware of as you're trading, I believe, because, and it doesn't mean you have to mark them and just notice them. Be aware of the fact that if you were in long here, if we dial down to a smaller time frame and you were in long here, just be aware that it may not go to the top. How many times, and you can go back and look through all kinds of charts, guys. This right here, that's what helps sets up our lower lows and lower highs. Okay? If you look, we have a high over here. We have a high swing. Came down, made a low. Well, this come up, it made a lower high. It didn't magically do it. I mean, I got a zone there that's a good price level that we saw that had a major swing turn there. But look at where these candles are. It's the bottom of these candles, inside top. Okay? But that turn created a lower high. Okay? So you're going to see that, and then if we're in a bearish formation, it'll blow through the bottoms. Okay, so it turns at the inside top, turned at the inside top, came down, went back, but then it blows through the inside bottom and the low. It's pure bearish, okay? Same here. It pulled up here, and if you look off to the left, it turned around in here. You know, that's the price level that it turned at right here, okay? But then it blew through the bottom. That tells you it's very strong bearish still. Okay, it's blowing through the lows, but turning under the highs, if you want to put it that way. I've never said it that way. So it's coming up, it's turning underneath the highs to give us that lower high, and it's blowing through the lows. When it stops blowing through the lows, you gotta not panic, but you want to say, okay, it might set us up to go long. So right now, pulled down, made lower low, lower high, but then this is a higher low. And then this one is right there. It's more of a double top at that price level. So it respected this old price level here. So that price level is a good support resistance level to mark on the chart, okay? And then right now it's coming down off it. So what we're looking for overall now is for it to blow through these lows, because these lows, if I mark them, they're basically at the same price point. So do I want to get in any of this right now? I don't. Personally, I don't. I can tell you right now, and I'm on a 15-minute time frame. I haven't even dialed down to, you know, the 5 or 3. But to me right now, I don't want to get involved in this. Because right now, if I wanted to, I'd have to see a break of either one of these levels in order for me to get in on a lower time frame. Because right now, it's just coming back down. It's kind of triple testing this. So I could set an alarm on this, is what I would do. I hate when I double tag those. So I'd set an alarm on that it's crossing down. I want it only on the bar close. There's my alert. And I would set an alarm up on that so that if it pulls down, and then I would actually back it down. I'm not even on the candle wick right there. Put it on that candle wick. So now I've got an alert on that in case it breaks low. And then I would set an alert on this one as well. There, I did it again. That's a bad habit to double click that. So we want to know if it's crossing up on this one. And we want to know only on the bar close. I like to know that a bar is closed past an alert. Now, if you're sitting here at the computer, you don't have to. I mean, you could have it alert you when it's crossing and price is just crosses that line and instead, and then, I mean, you're already sitting here. It just makes you, and it'll make you more aware, and you're just going to watch it. So for me, I want to see a candle close past that, either one. And right now that's set up on the 15-minute time frame. So when I just set those alerts up on these, it's actually setting it up on a 15-minute time frame. So it is only going to let me know when a 15-minute candle crosses. So I'm probably going to change that because I'll be down on the 3. But bear that in mind. If you set alerts up on a line, it will freeze to that time frame. So when I set it up to bar close, it's going to be a 15-minute candle close, which for me could be a, you know, whole move already. And then we're going to dial down to a 3. Well, we already know where it's at. We know where we'd like it to go. We'd like it to come down to the zone below us. And then I'm going to look for a break of that zone or bounce. Ideally, we would like to see it form higher highs, higher lows, and get in. So overall, we know how the swings are going. And this is why you have to do a top-down analysis, because you come down here and you're trading. We're doing a whole different thing down here, guys. If we traded this bounce long, we'd have had a trend line up that. Well, what did it do? If I go in and draw a trend line up there, let me draw one from here to here. So if we had a trend, I call them trade lines, guys. You guys call them what you want. A trade line, all it is, it's a trend line. It's a short-lived trend line. So this is still a trend line. I just call it a trade line because it's only on there to support my trade. Once my trade is over, I can remove it. So basically it came up, made another run at the trend line, pulled up, made a little higher high, and then bam, it made a lower low than this one. But then it came right back to test that level. So on rejection of that level is when you could have got in short. And you could also say the fact, well, it's close to that 4-hour zone. We've already also been trading this short. Remember, the 4-hour time frame, the 1-hour time frame is bearish. So the odds are in my favor to short this thing. Okay? So I want to trade with the odds in my favor. The more odds you can stack in the favor, the more successful your trade's going to be. Okay? And then you're looking for that 100% setup. And then if you don't have 100% setup, well then dial back your contracts if you get in. So that being said, yes, I'd take that short. I wouldn't take a break. And this is something personal. You have to decide. Are you going to take a break of a trend line? If you take a break of it, you'd have got in there, you sit through, you're going to sit through in the negative for a while. I think a lot of people that I've seen don't. They wait for that pullback, that second test of price. And that's what we had here. We had a second test of price. So some people might have got in on that. That's about a 50% pullback. If you look at this move down that broke the trade line, well, if you look at this green candle, it's about a 50% pullback and then a red candle. So the Fibonacci traders are getting in on that trade that it went to 50. Some traders wait for it to pull back to the 618 level, which they'd have been getting in around here. So depending on what you use, you might have still, a Fibonacci trader getting in on a 50% retracement level would have got in there and still would have been sitting in the negative for a bit, but not as much as the negative as the breakout guy. Now, if you got in on that, that's a whole different story. But ultimately, we want to go short with the larger time frames. If I can trade in with the larger time frames, it increases my odds. So right now, I've actually missed this. That's why I said I'm not doing anything right now. I can still come in and draw my lines. I'm not going to go through and draw all the lines. There's really not one here, up here that was broke and pulled back up to the inside of that bottom. And then this would have been a line to trade when it broke. If you had a line from like here on up, you would have got in on this pullback probably here, traded short. That's all over. I'm done. I can't do anything with that. But I can do something here. So this right here was a good swing up. Nice bounces, pulls. There are some people in here that do retracement trading. I do it sometimes too. It's fine. So that would have been a trade line up. However, think about what the larger time frames are doing. The 4 hour and the 1 hour, 15 minute. But the 4 hour and the 1 hour, they're going short, especially at 4 hour. We're in a downtrend. I only want to short. If I get my trade setups and I short, I'm going in 100%, whatever my contract setup is for my account. I go in 100%. If I would like to trade a retracement like this, I can do that because I would have had a trend line here. We would have, if I would have been here, then maybe it traded short here. But I'm saying maybe because I don't know at the time. But let's say you had a trend line down here, trend line, trade line. What did it do? Well, it broke through, tested the back side, which was also this price level, which we can also see support over here. So you got to look back and go, okay, well, there's a reason why it turned there, green candle, bullish, you're in. It's against the major trend. It's against the 4 hour. It's against the 1 hour. I'm going to go lighter with contracts. You can look back and say, yeah, but look, it went all the way back up to that high. It's easy to look back now, and a lot of people don't cover this. They say, oh yeah, we'd get in with full contracts. No, I wouldn't. Because if I get in with full contracts, I'm basically saying that I want to go against the trend and I'm going to max out. And I don't do that. Against the trend, I will get in on this retracement or pullback. However, I go lighter with the contracts because this may not have played out that way. It could have pulled back up here to test this level. You see where the line is off price. So it could have pulled back up there to test that and then just tanked and went to the zone. So again, if I'm trading against that main trend because the main trend is down, I have to expect that could happen. I have to expect that, okay, I'm getting in on a bounce off this old trade line here, and I want to trade it back up to a profit target, pull my partial before it gets, say, to right here, the inside of this top. And when it gets there, I'm going to close out partial, which would have been basically here or there. One of those two swings, I would have closed out partial because it's up near this level. And if you look back here, this is a high. I probably would have actually drawn a horizontal ray tool off this high, and then for me, it would have been this one and close out there. So there's your closed partial. You leave runners on, and then we would have moved our trade line out off of like, as it moved, we would have moved it off that wick. And then as we would have closed out partial, left runner on, you could have moved your stop to break even, which would have been down here, safe trade. And then you might have closed out there if you called that a break of the trade line. Okay. And then that's fine, but it just, you wait for the pullback on that. And we never really got a pullback on this. So this thing broke a trade line and went down. So I would not have gotten in this except for a safety trade, safety order. And a safety order is a pending order, so you don't miss the move. I'm not going to go into whole details on that. So that's kind of my setup right now on gold is, yes, I'm watching it. Now it just pulled back. Can we short that? You could short that down to the, right now it's hitting near this zone though, guys, or this low. So we have these candle bodies that are hitting right inside that low. So it's no wonder it pulled back. And then you can look for support and resistance all over the place. If I'm looking at this low right here, that's about where it's turning now. A little bit higher maybe. But you could trade it short here, riskier trade. The move to get in on was when this broke here. Safety order on in case it broke and run without you, which it did. We didn't get a pullback. And then and a safety order, again, is just a pending order below where price is. It's up to you how far you put it. You could put it somewhere. Sometimes it'll tap it, put you in, still pull back. So, and you don't have to do that, but you go in very light on a backup trade or safety trade. And what that is if it moves down like this, you put a safety trade down below it. And then that way, if it breaks and runs, you're still in the trade. You're just in light. But in the meantime, you wait. And if it pulls back, you close your safety trade off, which is that pending order. And then you'd get in short. So again, it just kind of helps you to get some extra trades. It's riskier because it could still pull down, pop you in, and pull back. So if it's riskier, less contracts is all you got to do. Less contracts. All right. So right now for me, I'm out of gold, and then I'm not going to do anything. I really want to wait for it to get to one of these zones, and we've got news coming out today. And we've got the U.S. stock market opening up in about 45. All right, so oil. Make sure this is the right one. There we go. So we have several zones on this. I'm going to actually change this red one here to green. So we'll change that to a buy color. Or sorry, I want that yellow. Not green. I want this as a mid zone. And I'll go over why here in a minute. And this one I'm going to label as green. Again, we're looking for one below, one above. Sometimes I leave them on. These are going to stay, and this is definitely going to stay here. This is a line off of 4-hour candle body lows right there. And those came into play Friday. Those come into play Friday as it come back up. Okay, so at the end of Friday, we had a nice push up, and that green line is vertical line is from Sunday. So Sunday, we had another push up and pushed up through our mid zone, and then it's come back to test it. So we've got a couple things going. Right now, as you look at the 4-hour, we're bullish. That's definitely bullish. I mean, we were bearish over here. Nice bearish swing. It bounced at a 4-hour zone and then pulled up and broke the downtrend line. Well, then we have to think bearish. And this is on a 4-hour time frame. So notice a 4-hour trader, if that's you, you have to decide, are you taking the break or are you waiting on a pullback? So if you're taking the break of a trend, then you would have got in at the start of, or at the end of that candle. Candle close, you're in. Okay, you're sitting back through the pullback. Don't tell me you're down on a lower time frame. If you say I'm a 4-hour trader and you take this and you take that long because it broke trend line, don't tell me you didn't take that long and you're down on a 15-minute time frame or a 1-hour time frame looking to get in, because then you're a 15-minute trader or a 1-hour trader. Whatever you take your entries on, that is the trader you are. Okay? You can look out at the 4-hour time frame or the daily or the 60, and that's what we do to analyze market direction and what's happening. I want to know when that 4-hour candle closes across a trend line. That's why we set up alerts. If you come in and set an alert up on this line and had an alert on that line, it's going to set it up as a 4-hour alert. Okay? But I want to know when price crosses that, and then I'm just down on a 5 or 3 looking for a bounce in there to get in on. But we traded all that. So basically, we're in a bullish move. Overall, I should be thinking bullish. Now, that being said, we're in a pullback. We're in a retracement of a 4-hour uptrend. Okay? That's all this is. This is right now. That's all this is. So right now, this is a retracement of a 4-hour uptrend. It is a retracement back to our trend line that goes from this point to this point. Right now, that's all it's doing. So again, this is why we go out to the 4-hour time frame and work our way down. This is all pre-market. That's before you trade. I know this is going to go a little bit longer because I'm going through and talking it out with you guys. This does not take this long. When you're doing it yourself, you're not doing all this talking, communicating. I mean, I guess you could. You could be talking in your head, talking to yourself. That's all right. Just don't argue with yourself. But ultimately, this is what, if you want to be more successful, you need to do this. And just because we're wanting to trade with the big boys, with the longer term trend. So again, 4-hour chart in a main uptrend, and basically our target is up here. It's the top of this zone. Okay, it's that red zone. So that's our main target. We'd love to see it keep skipping along up there. And right now it's retracing back. So what I'm going to do is dial down, and we already know we've been in it short on this retracement. There it is again, retracement. Here's the break of that 4-hour trend line. And then right now it's just retracing back. So it kind of moved more sideways. We saw lower, what we see in here is lower highs. High, high, high. So we got lower highs, but the lows are about the same level. So that's more of a pendant in there. If you draw a line across here, and then one down from here to here, it's more of a pendant formation or flag. Broke through the bottom, came back and tested the bottom, went down again. So that's still part of our bearish retracement back to this trend line. So overall, and this is how I'm looking at oil right now. As of right now, I'm only down to the 1 hour, but overall my thinking is, okay, it's still in a retracement back to this trend line. I also have a 4-hour zone here. So could you see that pulling down further to this trend line and zone? Yes, I could. I could 100% see that. Can I see it possibly go up? I mean, right now it's made a lower high, but could I see it possibly turn here and go up and make the lower high here and then go over to the line? Yes, because we also have what's called time. We have an upward move, a downward move, but we have time. And sometimes these things sit sideways just because of time. And what happens is time will tick away and it'll look like it pushes through our trend line, and it does, but it's because of time. And that's why it's ticking sideways. It's just not, we're not seeing a bullish move, we're not seeing a bearish move. Like over here, we're seeing it tick sideways. That's just time. There's no volume in there. There's no volume. There's no traders trading massive volume in there. Okay, that's more just time ticking away. You'll see that often. I mean that, you know, the trading was here. This was a nice bullish move. No moment, no volume in there, no movement. Bullish again, no movement. Bullish again, sideways, big bullish move. And then you'll see a retracement. So the bigger the move, typically the bigger retracement you'll see. These small little pushes, like this one here, you'll see more time tick away. You'll see more sideways move. So this right here was a nice big push up, decent retracement. This one here, nice big push up, decent retracement. So you just can't get surprised if you see those. And sometimes you won't even see those. Sometimes you'll see like over here, nice big push down. It pretty much went sideways, didn't really retrace there. All right, so again, on that time frame, we're still thinking bearish. That's the way I have to look at this. We are in a pullback to this, to that trend line. You could draw a retracement line off the tops. It's more sideways than anything. And that would have to be a retracement line for me. That'd be a retracement down line. Ultimately, I need to see it break that before I'd want to get in long on a long and hold to that upper zone. Okay. I can also draw one from here down to here, this top. And that again is going to be a retracement down. I like labeling my lines. You don't have to. It's more for people when they look at the charts, they can see what I'm thinking. So right now, and they know what to call the line. Oh, we're in a retracement, pullback. Okay, so overall, that's where we're at now. Right now, it's hitting this price point, so it could very well pull back up here and turn on that. If it pulls back, I would look for it to turn on the retracement line and still go to this. This is my main target right now. So my main target on this is this trend line. It could happen over here. It could drop. U.S. news opens or U.S. market opens. It could drop and just hit here. It can move more sideways, kind of tracking down the trend line, hit here. It could move. This could be the bottom. It might not go lower than this price. It could pull up and hit this, pull down, test that price level, pop through, and then hit here. I mean, that could be the way it tracks before moving on. So again, right now, it is a retracement. Now, when do we call a retracement not a retracement and a reversal? It has to break this trend line and set up on the other side. Do we miss part of that? Yeah. I don't try and predict the tops or bottoms. So as this pulled up and we see a big red candle, I don't say to myself, oh, we're going to have a reversal. I'm sure this is going to pull up, down, up, down, up, down, track over the trend line, break it, track over the 4-hour zone, break it, and go short. I want to get in as early as possible. I'm going to short that and just hold it. Okay, because that's trying to predict this is the top of the move. That's like saying over here on the left that any one of these points, like this one, was a turn short. And you'd say, well, I think it's going to break through that trend line and go back to this 4-hour candle low. Well, it never did. It went way up. So how many shorts did you play? I've seen guys sit there and try and do that. They will try and say, I'm going to short there. And they'll try and pick a short. Now, that looks good now, but I've seen them like place a short here, and then it moves up, and then they go, oh, red candle. Surely that's, here's what I've heard. Surely that has to pull back down to this zone because it's just overextended. It's moved so far. It's overbought. Who says? Don't look at those lagging indicators that say it's overbought or oversold, because they will top out all the time. They're topping out because of the move. They're not topping out because oil's overbought. They're topping out because of this move. They totally track, they're lagging. They track the move. So it tracks this move, and that move up is a long bullish move, and it pushes that particular indicator into overbought. It just pushes it there. So now everybody reading it's going, oh, it's overbought. I'm going to sell. And then you take a losing trade. So you can't use just one or two like that. Price action is real important to be aware of off the highs and lows. So up here, yes, that person would have shorted. But how many of these would they got in? If they shorted there, losing trade. If they shorted here, losing trade. If they shorted here, said, oh, look at me, I'm predicting the top. No, you're not. Because you just tried 2 other times and they lost. So stop trying to predict the tops, okay? So for me, yeah, you're going to give back part of the move for it to set up. But this is basically just a retracement back. So it's going to do a couple of things in here. It's either going to break this low, pop down, but overall we're going to get a test of this green line. We should get one. So overall, I'm kind of thinking, nope, I'm not in it. If it pulls down here and hits this green line or that zone, especially if it just hits here, if it hits a green line, I see a higher high, higher low for, I will trade it. I'll take it, close partial as it approaches this, and then leave a runner on. And if it breaks that, it comes back and tests this. As long as it is above this uptrend line, I will hold my long position. So again, if it pulls down and bounces in there, higher high, higher low, I'm in. I'm in long, close partial if it pulls up here, and then let my runner go. Love to see it break that and run on up. That's my second target. And I'd close out another of my partial, close out another partial of the trade, and then leave the rest on in case it breaks that and runs. So that being said, in here again, goes up here, close partial, breaks through, pulls back. I'm still in. And if it bounces here, I'm still holding the runner. And as long as it bounces above that line, I'm still in long. I'm in short. If it breaks through this trend line, I need to see bearish setup. And unfortunately, there is a 4-hour zone right there. So it could pull down and bounce off the top of the zone, the middle of the zone, the bottom of the zone. So for me, a long-term short, it needs to break through that zone and then test that zone. Does that mean I'm not getting in on a short? Sure. I'm not getting in on the short till it breaks that. And this is the trade. That's the trade plan I set up on that. I can dial down to a 3, but we already kind of know where it is. I mean, it's hitting this bottom. I know one person only that's in on this. As it pulled down here, made this low, lower high, higher low. That's we might see bearish confirmation. And then it came up here and broke this high. So this is how you can trade on the smaller time frame and get in on these bounces between these trend lines. Was this right here? I mean, it pulled down, made a low, made a high swing, made a higher low, and then it pushed through and broke that support resistance level. So that's your signal that it's pulling back. This trend line, if you look at where it's drawn from, should tagged it from back here. Let me get it down. Since we moved down to a smaller time frame, got to get it on them candles. Okay, so some people again take the break of support and resistance and get in. So they'd be in on that little candle or this big green one. One of the two. If they got in on this green one, they're sitting through this retracement. Me, I'm looking for a pullback and a bounce. If it goes without me, then it goes without me. So the pullback and bounce happened. So it pulled back in here, testing this old high, and then gave a green candle, and that's your entry. And those 3 candles right there are actually a morning star. But again, you're on a 3-minute time frame. They don't hold up. They don't hold a lot of weight on the smaller time frame. But that would be your entry. You'd have to break that high, which it did. And ultimately, it's your target should be this retracement line. Now that again is against the trend. That's a pullback or retracement trade. So overall, we're in a big retracement on the 4-hour to the green 4-hour trend line. In the meantime, we had a nice push down, bearish setup, broke, tested. Can you trade it long? Yes. Where's your target? Should be that retracement line right there. That should be your first and primary target, because it may not go past that. That's how you have to think of this. Okay, I'll take it. I'm going to take it long, which is against the 4-hour trend and against the daily trend. However, we could see that it was pulling back. Even on the 4-hour chart, we saw it was pulling over to this line. So I can get in long. However, I have to know it could turn there. So as long as you're aware of that, know, and have the lines on your chart, and just say to yourself, okay, that's going to be my target. And of course, you'd love for it to pull straight up here. and hit and close partial. Well, it didn't. It just tracked more sideways. So you never know. It could have just flattened out and went sideways over that line. It's going to do one of the three. It's either going to pop, it's going to kind of move gradual at a 45-degree angle, going to move sideways, get there, or it could just totally reverse. But you're trading over to that, and then you'd pull partial in one of these levels over here and close partial, and then we wait for, because if you took that and traded that, and that's your entry, you have to come in and draw your trade line. If I'm trading it, I want a trade line. So I would have drawn a trade line here. Okay, and that's on out. And yeah, I still draw it. So draw this one as your trade line up. But realistically, we had two lows form. We had a high, pulled back, and made a low. You get in on the green candle. You're long. Well, now I have a low, two lows here to draw another line on. So this is going to be my more aggressive trade line. But that's the one I'm trading. That's the one I'm in on. And that's why these don't, that's why I call them trade lines, because they're not going to stay on my chart long term. And that would have been your line because you got in on this candle. So you're going, okay, I have two lows. I'm drawing my trade line. That's what I want it to run up. If it runs up here, I'm going to stay in until it breaks it. I'm going to hold my runner. Pops up, you close partial, bounces along, it goes up more, and then it breaks it. And you can either close there, close your partial, or you can wait for bearish setup to form, and then you would get in short on that. So, and then all it did was pull to that line. So that's how oil kind of played out. And again, how I'm looking at it is just to wait for it to pull back to that 4-hour trend line. Let's go ES. About 9:04. I want to get this done before we go through and start the U.S. stock market. Okay, so U.S. I don't really have to do anything, or ES I don't really have to do anything. S&P here. We had our downtrend line off of these swings, and we actually broke that. There's Sunday's vertical line. So this is the 4-hour. So overall, we had a massive, nice downward swing with a huge retracement in here. This was kind of a medium retracement, another medium, but then we had it pull deeper. Nice, huge move off that, even down to an old uptrend line and a zone, and then it kind of double bottom there if you don't include the wick. And then we had a nice push up, breaking through these zones, breaking through the 4-hour down trend line, back up through an old trend line. That's why I left these two on there. They're key 4-hour uptrend lines. That's why I just turn those dashed. So overall, though, when I look at this chart, I see, well, look, this is where we drew the zone. We drew the zone off this swing over here. Okay. Pulled up, tapped it, pulled back. Pulled up, tapped it, pulled back a little. Then broke through. Went up here to the yellow zone, pulled back, tapped the bottom of that zone again. So for me, yep, still a key valid zone. Well, how am I looking to trade this for the day? So overall, it is bullish. It's bullish move here. Okay. A bullish swing here. It's been breaking 4-hour zones, 4-hour trend lines. Bullish move. It did a pullback after hitting that 4-hour zone and just tapped the bottom, went back up. It's Friday. Friday it went back up and tapped that again. And that's where we were hanging out Friday. So on ES, it was tapping back right under that 4-hour zone. Okay. And then Sunday, it went up and tested the top of that zone. Is all it did. So that's Sunday's line. Sunday it went up, tested the top of that zone, which was over here. And if you look at the wicks are about the same height. And then we had a pull off. So overall, long term, it is in a bullish move overall. We look at the whole chart, the chart as a whole, and go back. We know it's been bullish. We have an uptrend line here. We have an uptrend line here. There's one even down there below that that's solid. So right now, major uptrend. However, this was a huge retracement down toward that main outer up trend line. And then we have what's happening now. So 4-hour time frame, tested the zone, pulled down, made a low, pulled up, made a lower high, and then we're having this push to form a lower low. What does that tell me? That tells me that on the 4-hour time frame, it is bearish. And look at the moves. Just look at the candles. And the candles tell you a lot. Huge bearish push. It got up to a 4-hour zone. Huge bearish pushback. Bullish over time. Got above that. Huge. This one's really big. Huge 4-hour candle. Bullish over time. Okay, that's one 4-hour candle that made that whole move. Well, what is this? 1, 2, 3, 7, 8, 9. About 9 candles. Now it kind of hit up here. So, 8, 9 candles for it to get back up to the price where this one candle shot down. Okay? And then it pushed a little bit higher. If you're looking at the pattern here, big bearish pullback, bullish move above it to still make a higher high. Big bearish move, big bullish pushback to form a little higher than this turn. So we had a big bearish candle, and then we had bullish move. It did not, this time, did not push all the way up to this high like it did over in these. Okay, so for me, I start thinking, okay, well, we formed this red candle. It did not want to push all the way back up there. So are we seeing a flip in the market here? Are we seeing a bearish formation? And to me, on the 4-hour, it's been bearish. We traded it short. So we've been in it short. And we're trading it down to the zone and the bottom of the zone in particular, because that's where this turn was, and that's where it kind of halted over here for a minute. So that's how we're looking at trading this, is still short. 60-minute just looks sloppier. We've been shorting off the top, and then in here it sat really, those are hour candles, so it just kind of bounced back and forth on the smaller one, because I remember that. They were pretty decent swings. Overall, still trading it down to that. I needed to mark that level. Let me go back out for you. So I want to mark this high here. You can do wicks, you can do candle bodies. Again, we're on a 1-hour, so I like the wicks better on the higher time frame. But you'll see the high it pulled here. After pushing down, it pulled back and kind of turned right there at that price. If you project over to the left, you'll see that where this line is about in around where those candles are. Not exactly, but it's in around where the bottom of those candles are. So you could pull that back and go, okay, there's my swing, because there was a swing low right there. And that's where it turned here, and then that's where it turned here. You got a doji. Those almost look like tweezer tops. I'd like to see the body of this doji about the same as that one. That'd be perfect tweezer tops. So you got tweezer tops in there, and then we formed that bearish move. So we might get a pullback. We're just now forming a low. So just now we're forming a lower low than here. It might get a pullback on that before it moves shorter. So we go to the 15, and there's your push down off of that bounce. I would have been wanting to wait to short till it broke this level, which is right where we're at. So I don't know if that's going to hold. I would need to see a candle close below that. So we're on 15-minute candles right here. So during these candles, it pushed. This one pushed through, but that is not enough to take the trade, just on it pushing through. You need to see a close of a candle pushing through. So if you're a 15-minute trader, you're waiting on that to actually close below that line, if you're not already in short. Now, it's kind of tough when you have to close out trades, I know, with your broker. If you're a 3-minute trader, you're in already. So a 3-minute trader is looking for that pullback and test. Well, not quite yet. So 3-minute traders down here like this, and you would have a trend line or a trade line from here to here. And again, we are thinking bearish on this, so you'd be trading with the trend. So that is our trade line down. So right now, and you'll see on the 3-minute how it passed under that level. Well, again, when we were on the 15-minute, on a 3-minute time frame, because again, you want to trade with the larger time frame. We go out to a 15-minute, and all that 3-minute candle showed, the 3-minute candle broke and closed below that line. Well, if you go back out to the 15, it's a 15-minute did not close below that line. So you're taking on more risk by trading on a 3-minute time frame for sure. Then it finally broke and pulled down, and we had another candle close. You'd want to wait for a pullback and bounce. So we're not getting that. So it's back up above that line, and it looks like it is retracing the downtrend line here. And watch it pop and run. So it depends on where this candle closes here. And we've got, I don't know how much time we got on this candle. We got about a minute. So something I want to touch on, I don't think I'll go over NQ. It's pretty similar. Is your news. Someone asked me about news, and oh, you guys can't see that if I do that. Let me see if I can switch this over. There we go. So here's the news calendar. I know you can see part of that. Okay. So bear with me. All right, so the news calendar, I use forexfactory.com. There's several economic calendars out there. You want to get your news and know when it comes out. So here's kind of to set it up. It shows your light news in yellow, your moderate or medium news in orange, and your red news, which you expect high volume and volatility off of the red. So you don't have to look at all that. This is this week of news. Now, if you scroll down, you'll see there's a lot of news, because there's also multiple countries on here. You can go up to the filter. We could filter out yellow. We could filter out orange if we want, and then we can apply it. So now there's less. I can see it all on one little screen. Don't have to scroll. So there's your medium and hot news or high news coming out. We can go down and look for Wednesday. Here's Wednesday, or Tuesday, sorry. And here's Tuesday. So we got consumer confidence coming out. We expect a good move off that, 10 a.m. So we got about 45 minutes, and then the Richmond Manufacturing Index. So those are news for the US dollar, okay? So that's how you want to look at it. If you don't know what the news releases mean, you can tick on the little folder, and it will pop up and explain what the news is about in a brief form, and then you can actually click here if you want, and that will take you out and explain more, okay? It gives you past numbers as well, so you can see what happened in the months past. Same with any of these. If they've got a folder there, you can pop it and kind of read what they're about. So I do recommend doing that. You don't have to trade news, but you need to know when news is coming out, because it could affect your trade. I mean, here we are, 9:15. You should already be in a couple trades, maybe not because we're talking. But you need to know when these releases come out. If you want, and most all that is U.S. news, but you'll see others like the Australian dollar and some others in there. So I like seeing those because I also trade the Forex market. If you don't, you can open up the folder and click over here, none, and click US if you want, and then just click apply. And at that point, you're only going to see stuff coming out for the US. So if you only trade during the US session, this is good for you right here. This helps you plan the week. This is something you should do Friday night, Saturday, or Sunday before you start trading, but definitely before you start trading on a Monday. So don't go in blind and not know that a news release is coming out. I know a guy that does that repeatedly. And so I started sending him screenshots of what news come out. And I was doing it every day. And then I finally said, you need to just go to the calendar, set an alarm. So, because he was like, well, I forget. I'm like, okay, set an alarm. Set an alarm at 7 in the morning, 8 in the morning, whatever. Set an alarm, and that alarm, name it, check the news. Check the news calendar. Check for economic events, whatever. Then when that alarm goes off, go look. See what's coming out. I like to look the night before and know, but I still come back in the morning and refresh my memory. Now I need to turn this back on because I like to know when other stuff is coming out. And the reason why is I also still trade Forex. And if you look at Tuesday, we have CPI on the Australian dollar at 9:30 tonight, and you better believe I'll be trading that. So definitely look out at the news ahead for the day. And now we know what's coming out. We know that there's news coming out 10 a.m. for the U.S. dollar, so that we need to be aware of. So we know that things might start popping and moving then, and we just have to be ready for those things to happen. Looks like I lost my screen. There we go. All right, so, and see right now, that's why you have to be willing to look out the higher time frame as well. Because right now this is totally sloppy. The 3-minute time frame pulled back, gave a red candle. That would be an entry on a 3-minute. You're at a down trend line. But when you look at that 15, we finally had it pull through and close, and then it's actually pulled back as well to test. So it depends on where this 15-minute candle closes. I would actually be out here. This is where I'm going to stay to look at this. But then we have that news coming out as well. So we need to see how this 15-minute candle forms. So a 3-minute time frame, just you're gonna take more losses. This could end up still pulling short and tracking down that trend line. We just have to remember that out on that 15, out on that 60, out on that 4-hour, we're in a downward move. So if you get in short and can hold runners, we're holding down to this zone. And then not just the top of the zone, but the bottom of the zone, because that's where it hit here. Now, if we get a reverse here and a bounce, well, then we're going to trade it back up here to this level, price level, with it possibly stalling here at the inside of that level right here. It could possibly turn at the inside of that top. So just keep that in mind. And then you could leave runners on, and then if it tracks through all that, it could go back up here. So this is how you should think when you're looking. Nobody's got a crystal ball that can say 100% it's going short today, or 100% it's going long, or 100% it's going to go short 50 points and up 200. Nobody can tell you that. So the best thing we can do is look at the candle formations, look at the bounces more than anything. I look at the bounces. I look at that pull down, that pull up. That gives me a swing low. I'm looking at that low. Okay, I'm looking at the swing high over here because it hit that area a couple times. So it hit that area over here, hit it on these bounces, and then just pulled through and tested. So right now, it is more sideways than anything else. And I'm not talking long-term trend. We already know that if we go to the 4-hour time frame, that this is in a bullish move. 4-hour time frame bullish move up to our zone, up to this previous high. We know it may stall short. This may be our stall short. Right now, as we're looking, that is sideways movement between these two zones. So I have to treat it that way. So as I'm down on the lower time frame, I would love, if we get in short, I'd love to see it blow through zones and continue short. However, I know that it may have a problem doing that because right now it's more in between these two zones, bouncing back and forth. So that's how I want to plan to trade it. If it goes down here and gets to the zone, I'm going to look for, and it could do it here, here, or here. But if I see it make higher highs and higher lows, then I have to think it could be turning bullish and going back to the top of the zone. We could just see more sideways movement. All right. So I hope you enjoyed. I'll catch you guys tomorrow because we're going to do this every morning. And it'll be quicker because I'm not going to go through a lot of the stuff I went through today. So it'll be a little quicker in doing it. But this is what we do every morning to kind of set up before the market opens as we look. You should never just come to a 3-minute time frame to start placing trades, or 5 or 10 or even a 15. Always take a peek at the higher time frames. All right, so that's how we're set up for today. I hope everybody gets in some good profitable trades. So trade